Hello everyone, welcome back to today's episode. If you've been following recent global economic developments, you know that one tweet, let's be real, one truth, from Donald Trump can send shockwaves through markets and governments alike. Well, here we go again. Buckle up, because Trump, the self-proclaimed Tariff King, is back, threatening an economic whirlwind that could redefine global trade once more. Let's analyze this from point to surface, uncover the layers of the economic chaos this could trigger, and peel back why it's not just Mexico, Canada, and China on the line here, but everyone, including the ordinary person watching this video. Spoiler alert, the second wave of Trump economics could make the previous tariff wars look like a warm-up act. And no, the market's zzzzzing about it right now isn't the calm before the storm, it's just collective denial masking sheer panic. Let's start by laying out the situation. Donald Trump has proposed imposing tariffs of 25% on goods from Mexico and Canada and an additional 10% tariff on Chinese imports. Why? His reasons include curbing fentanyl inflow, stemming migration, and rebalancing America's trade relationships. While these may sound noble on the surface, the economic repercussions are anything but. To some, tariffs might seem like a simple, even elegant, solution for bringing jobs back to America and safeguarding domestic industries. In reality, it's a blunt instrument, like performing surgery with a chainsaw. Sure, it makes headlines and gives political sound bites, but it wrecks entire economies in ways that take years, sometimes decades, to repair. Economics is like a game of dominoes. Tip one in the wrong direction, and the whole system follows. Trump's proposal set off alarms for investors, economists, and global leaders, and here's why. 1. Mexico, an export-dependent economy on the brink. Mexico has the most to lose in this tariff tussle. With 9 million jobs tied to exports to the US and Canada, these tariffs would decimate entire industries. For instance, automotive manufacturing, which has thrived in Mexico thanks to cross-border supply chains, could grind to a halt. A staggering 2.3 million cars and trucks were imported to the US from Mexico last year, often made with American parts shipped south for assembly. Disrupting this could spell disaster for both Mexican workers and American car companies. The peso reacted immediately, plunging 2.6% to 20.8 per dollar, its weakest level in more than a year. To put this in perspective, a weak peso undermines Mexican consumers' buying power and drives up the cost of imports. It's a double whammy for ordinary citizens. Already, Moody's Analytics has revised Mexico's gross domestic product, GDP, outlook from 1.3% to a mere 0.6% for 2025. If these tariffs happen, scrapping economic growth projections entirely might not seem far-fetched. It could push Mexico dangerously close to a sustained recession. 2. Canada, the giant energy exporter at risk. Canada might not share a border wall with the US, but their economies are tied tightly at the hip. A $2.6 billion daily trade relationship ensures that anything hurting Canada hurts the US right back. Here's the danger, most of Canada's exports to the US are energy-related products, pipelines of oil and natural gas that keep American industries running. Imposing tariffs here could push prices even higher in a market that is already grappling with inflated energy costs, further feeding into global inflationary pressures. According to University of Calgary economics professor Trevor Tum, a 25% tariff could shave 2.6% off Canada's real GDP annually. This is recession math, plain and simple. The last time Trump threatened Canadian imports during his steel and aluminum tariff spree in 2018, the Trudeau administration responded tit for tat with counter-duties on a range of US goods. Anthropic or not, there is almost no way to avoid another tariff war this time. China. The trade bogeyman of Trump's presidency. After the 2018-19 trade wars that slapped $550 billion worth of Chinese goods with tariffs and tanked bilateral relations to historic lows, you'd think there would be lessons learned. Think again. This time, Trump is threatening a 10% tariff on all Chinese imports. How will this play out? For one, the cost of goods produced in China will skyrocket. Over 21% of what Americans consume originates from China, so the effects of smacking Chinese goods with higher tariffs will ripple directly to US customers in the form of inflated prices, higher input costs for manufacturers, and ballooning energy costs. Economists have already estimated that previous tariffs cost the average American household about $850 per year. With new tariffs in play, that cost could spike to over $1,000 annually, shaving more off consumer purchasing power, especially at a time when living costs are already stretched thin. Additionally, China is unlikely to just take the loss. Beijing has already warned that no one wins in a tariff war. The result could be new barriers to US exports into China, whether on agricultural products, semiconductors, or financial services. Key stat, As per Peterson Institute for International Economics, the 2018 tariffs directly reduced U.S.-China bilateral trade by 15%, and the resulting global uncertainty slowed global GDP growth by 0.6 percentage points. Imagine the impact of this second wave. While Trump's "America First" slogans resound with his voter base, let's remember how this strategy has worked before for the industries he claims to support. Automobiles and supply chains, major American automakers, Ford and General Motors, are already struggling with rising costs. Being hit with higher tariffs for cross-border vehicle production could force them to pass those costs down to consumers, driving car prices even higher. Remember, the average U.S. car price just hit over $48,000 this year. Tariffs could make that figure jump even further out of reach. Farmers and agriculture. While Trump talks big about supporting rural America, farmers bore the brunt of earlier trade wars. Tariffs wiped out billions in agricultural exports to China, forcing the Trump administration to issue $28 billion in federal bailouts for farmers. Another tariff war won't fix these imbalances but deepen them. The most surprising aspect of all this? Wall Street seems to be shrugging it off, for now. According to Nomura's strategist Charlie McElligott, ZZZZZZZ. This underscores a dangerous complacency in financial markets, reminiscent of the calm before the storm during the 2008 financial crisis. Investors are underestimating the potential for this tariff war to morph into a full-blown economic contraction globally. The auto industry's plunge in share prices is just the first signal of things to come. Mexico's S&P/BMV IPC stock index fell below 50,000, its lowest point in a year. The Canadian dollar also touched a 4-year low, a clear indication of how investors are positioning for potential fallout. Let's not forget, this might just be an opening play for Trump. His first presidency saw similar threats followed by renegotiations, most notably in the dismantling of NAFTA and the creation of the United States-Mexico-Canada Agreement, USMCA. He's learned the ropes, and will play this game with even more aggression. Still, the biggest flaw in this tariff strategy is its gross oversimplification of how deeply integrated the global economy has become. Strangling trade with your closest partners, Canada and Mexico, while simultaneously enacting fresh punitive measures against China is akin to building a house while cutting off your own construction material supply. Sure, you might win politically, but at what cost fiscally? The proposed tariffs are not just an economic hazard but a geopolitical gamble that risks unraveling years of progress in crafting interconnected supply chains and trade agreements. Meanwhile, the markets may be bracing for impact, or perhaps not. The real losers here? Everyday Americans, Canadians, Mexicans, and even Chinese workers and businesses, the backbone of the very economies at risk. As Trump's second term prepares to pick up steam, the question looms, are we facing another recession disguised as policy reform? We'll definitely revisit this in the coming months, folks. For now, buckle up. That's it for today's analysis. Don't forget to like, share, and subscribe so you can keep up with the latest and sharpest takes on economic events shaping our world.